Hey guys, Stu here with Lucid Investing. It is October 14th, wrapping up the morning session. I wanted to do a quick video to walk through where we're at in the market right now and kind of show you all the frame of the AM session here. So I'm going to start on a monthly chart. And before we jump into it, I will just say, the past couple weeks, price action's been very, very volatile, very uh, honestly just absurd. ICT himself went live last night on Twitter, was talking about how he's never seen anything like this. So I say that as a word of maybe encouragement that if you're not doing well, or if you feel like you're taking and framing trades that should be playing out and they're not, there's other variables at stake right now, and it just, quite frankly, it hasn't been easy. And the market is seeking lower. When we take out big areas of sell side or buy side liquidity in general, it takes a little bit of time to determine if we want to continue to lower levels of liquidity or if we're going to reverse. And, that's where we're at right now, on top of multiple economic calendar events. So here we've got a monthly chart. I'm going to walk you guys through how I determine the daily bias, and that starts all the way on the monthly chart. So I'm going to point out here in the month of July, we've got this bearish order block. So I'm going to reference the open of that order block. And from here, what I'm going to do is I'm going to look for the next up close candle where it's low, or where it's high is lower than the low of this candle. So if I look back to the left, this isn't below that candle. This isn't below that candle. This is not below that candle. I'm sorry. Excuse me. The last down close candle. So what we're doing is we're looking for a bullish order block after we've got the bearish order block here. So I immediately gravitate towards these two down close candles before a rally. And we can see that the high of this candle is not below the low of that candle. So we'll keep moving down. And the first down close candle, order block, right before rally, we're going to take that high. So this right here is our monthly range. Now I'm going to double click into lower time frames, and we're just going to take a look at that. And I will reference as well, we've taken out sell side liquidity right here. So this was a big level that we were aiming for, and we have taken it. Now we're trying to determine, are we going to go back up here? Are we going to rally and start taking out some of these highs? Or are we going to continue down to this monthly range? And I believe we're going to continue down to this range, and I'll walk through that now. So again, this is the sell side liquidity we were seeking. This right here marks our monthly order block. On a weekly chart, we can see that we came into this order block last week, and we had a very, very strong rejection down. This was the same week where we created the outside week, basically on the first day of the week. And I'm going to go into a daily to show that more. Not much to show on the weekly. So again, right here is our monthly order block. Take that level out. We had a pretty hard time getting above it right here. You can see how we came into it, dumped, came back up into it. This right here, these two green candles, up close candles. This right here was the outside week, Monday and Tuesday. Came right above that order block. Boom. Came back down. Took out that sell side liquidity that we were seeking, where I've got this level drawn. And now we've got fair value gaps, liquidity voids. We've got another order block here. So the point is, as you can see, institutional sponsorship, every time we've touched order blocks, we have continued to move lower. And if we look back, I'm going to get rid of this sell side liquidity right here. If we look back, we can see how that has stood true. So we've got, didn't even make it up to this order block, right? So we saw a rejection off of the monthly order block right here, which was a bigger level. As we were making our way down, we had this order block right here. Price came up, went barely into the body of that candle. Boom, 4 or 5 days of red. We've got an order block over here. Price moves lower. We retrace back into this level. Again, wicks right above. Probably one of the largest candles we've seen on the market, probably ever, maybe in a long time. That's a really big range right there. That one alone is 900 points. So that's a huge day if you were part of that move. So the point I'm trying to dial in here is we start from the longer time frames to help determine the bias, and we see if those levels are held. And we can see as we refine those levels and go into lower time frames, we can see where the institutional order flow is stepping in, right? And what that means is the banks, the big money, is entering short positions on these order blocks or these up close candles before a dump. And every time we seem to retrace back into one, got it right here, we've got it right here. We almost made it up into the body of that candle before we moved lower. Then we've started to dump. So we can see, obviously, the institutions are not buying dips. They're selling rallies. And I believe that they will continue to. And yesterday, anybody that participated in the market yesterday knows how ridiculous that was. I think one of the statistics was it was the third highest reversal day in the history of the markets. Super abnormal. We had a very large range, and we took out sell side and buy side liquidity in that day. Very abnormal. In my opinion, it wasn't a reversal at all, even though the nature of the engulfing candle after an inside day, the volume supporting it, we went into this liquidity zone, and we can see how price has already reacted. As a matter of fact, by the time this video is posted, today might even end below the low of this candle. And again, I believe that we are seeking this area here. So that's over 2,000. Well, it's almost 3,000 points that we would drop right here alone. So I'm going to get into talking about the AM session and how that was framed today. So right when I'm looking at this chart, again, we can see larger time frame. It's telling us we had this active fair value gap, this active liquidity pool. And since the institutional sponsorship is bearish, this is holding true to allow us to believe that this is a high level of resistance. All right, I'm going to go ahead and mark out a few levels here. We've got pretty clean highs, as you can see, where we tried to come right back up into this level. We failed to, went lower. We took it out. This right here is buy side liquidity. And if we look just to the right of that same level, we've got the midnight open right just below where buy side liquidity starts. So midnight open is going to be 11,167.25. and the buy side liquidity is right there at 11,185. And I would mark those out, but just spare the time. So we come back up, touch right above midnight open during the London session. We see a big dump, come back up, and then we rally to come above buy side liquidity. At 8:30 right here, we had an economic calendar event with high impact. We see the pump go into buy side liquidity. Right when this happens, for various reasons, right, on top of institutional sponsorship being bearish, top of being in this daily fair value gap, on top of being above midnight open, which is the Judas swing, we've got 3 or 4 things that check the box right there that tell us we should expect to see a pretty significant dump. Okay, so if we click into this in the lower time frames, how could you have been a part of this move right here? Simply just looking at the power of 3, which is an ICT concept where he talks about manipulation, consolidation, expansion, distribution. You could have simply just entered above midnight open with an unclear stop, and you could have said, hey, I'm willing to weather X amount of loss before I'm going to call it quits. Or if you're like me and you'd prefer to assume calculated risk, you can go into lower time frames and we'll see if there was an opportunity to go short per his model. So the first thing I see when I look into lower time frames here in the 5-minute is, as we come lower, did we retrace back into an area of interest to enter? And right here you can see where we've got an up close candle right before we start to make this drop here. And this marks 9:30 open. We had another economic calendar event, high impact at 10 a.m. right here. So you would have been able to be in this position before the second high impact calendar event. So on the 5-minute, you can already see where we've got the order block. So let me mark it the low of that order block. Let's go into a 3-minute. So again, this right here is midnight open, this lower black line. Right above that is buy side liquidity, which we took out. And right here, I've marked our 5-minute order block. And you can see as we refine this, we can get a little bit more precise with where that order block is going to be. So off the 3-minute, can move it right there to the open of that candle. You can see price just barely goes above it. This is where you enter short. And we can go into a 2-minute, see if we can refine it even further. Again, right at the 50%, if I took an equilibrium of this candle right here, you can see if you zoom in really quick, the 50% is right at the same part where that black line is that I've already got. All right, so if we want to refine it even further, we can go into a 1-minute and see if there was even I'm not sure why that's doing that. So it looks like 2 minutes going to be the most we can refine. Chart's being weird for some reason. But the point is you had a few different opportunities to enter the short. You had one right here, and you could have gone short again right there, depending on which time frame you took it off of. Me personally, I probably would have taken the risk off the 5-minute, knowing that we had just taken out relative equal highs over here, and that we respected the equilibrium of our down close candle. So your stop would have been you would have entered right at our black line here. See if I can get this close to exact. And our stop would have been above our order block right there. And you can already see we would have been seeking external liquidity. At the very least, we would have been seeking down here. So that's a 200-point move. Reward to risk ratio is almost 9 to 1. This right here You take one of these a week and you can quit your job. One micro NQ contract right here took from 9, let's say you entered right here at 9:30 and you exited right down here at 10:10. That took 40 minutes. And had you played one micro NQ contract, that would have equated to, let's see, 305 times $2, $610. Now, if you would have played one NQ contract, you would have just made $6,100, risking close to nothing in a matter of 40 minutes. So I hope this was helpful. Wanted to post a video for y'all, as I know it's been a week or two since I've been on here. Had some stuff going on in personal life and just professional life, so I haven't been in the charts as much as I'd like to. But this is what I just talked about. It's going to apply moving forward. This isn't just for today. If we go back into a monthly time frame, we can see again where we're seeking, which is all the way down here. And once we get to that level, it doesn't simply mean that we're just going to go long. I believe we're ultimately seeking this low, potentially this low. Kind of crazy to even think that we could drop that much, but that's what the chart's setting up for. And, I guess technically, I don't know what percentage of a pullback dictates a market crash or a recession, but I know that getting down here would be well over 50% retracement from the high. So from a technical perspective, we I guess are in a market crash, or that's really what I'm projecting and what we've been saying. So again, hope this was helpful, guys. The bias is bearish, and until we see a reversal here or have any other reason to believe that this was the only sell side liquidity the market was seeking, I'm going to stick to that bearish bias until we seek this level. So until next time, guys, take care.